Hey everybody, Chuck Barone. It is Tuesday, September the 19th, 2022. Here we are, the day, it's like, they have Christmas Eve, they have New Year's Eve, and I guess today is Powell Eve, Federal Reserve Eve, because we know tomorrow's the day. We'll have Chairman Powell, they'll announce their rate decision. The market won't pretty much 100% sure nothing's going to happen tomorrow. We'll see. But Powell's comments will certainly be well listened to. But before I get rambling, which I do, let me welcome everybody to the show. And as always, thank you guys for your support, man. You guys keep coming back. We're going to keep putting these videos out. We appreciate you guys. All right, so let's talk about these markets today. As I was saying, we know tomorrow's the big day. And if Powell comes out and just really kind of goes along with what the market's predicting, I guess the big day could turn into a big nothing burger day, and then we'll turn to Thursday's data. Powell, of course, will hold his press conference after, and that should be pretty interesting. If he's going to give any indication of future Fed moves, where they're at. Of course, then they'll release minutes and data and all kind of stuff from the meetings. They're charting what the Fed is projecting as far as rates. The markets will adjust their bets accordingly. It's going to be fascinating stuff, guys. But today, the market's kind of just holding their breath a little bit, not liking the little bit of data that came in. Market's a little bit uneasy with these rising oil prices. So stocks falling today. The Dow down 106, 34,517 on the Dow. The S&P down 9 points, 4,443 on the S&P. The NASDAQ down 32 points to 13,678. So really, activity in the markets, a little bit to the downside, but really nothing to write home about. Just a very quiet day, kind of, with more sellers than buyers. But I haven't looked at volume, but I'm going to guess it was pretty sluggish today. Market waiting on tomorrow is the big one. Bond market today selling off a little bit. Bond yields rising. The 10-year up 4 basis points, now sitting at 4.36%. The 2-year up 3 basis points at 5.09%. Looks like everybody kind of getting used to the 2-year above 5% now. We'll see how long that lasts or if it continues to rise. The 10-year high number, man, they said is the highest number since 2020. So the bond market kind of reflecting the negative rate bias, figuring rates are going to continue to climb and stay higher. The dollar today, not much activity, and the dollar up very small, sitting at 105.13 on the index, still a very strong number for the dollar. Not much activity like everything else in the markets today, just kind of holding its breath, waiting on what happens tomorrow. Strong dollar, weakened metals, but very small today. Gold falling $2.40, sitting at $1,931.10 for an ounce of gold. Silver down just 5 cents, $23.17 for an ounce of silver. So metals more than holding their own. Tough dollar makes it a little bit harder for metals to make any kind of real rally. But the dollar's not going to stay elevated forever, guys. When it comes down, you're going to see a nice upward move in gold and silver. Oil today continuing to rise, up just 17 cents, a very small rise. But a West Texas Intermediate sitting at $91.65. People already feeling the pain here in Vegas, at least at the gas pump. You guys getting hit out there from gigantic, massive, instant rate increases with oil going up. Man, I can't believe how quick they are to raise prices and how slow they are to cut them back when oil comes down. Over $5 per gallon here in Vegas now. Bitcoin today up $397, sitting at $27,206, a decent number for Bitcoin. In spite of all the negativity and everything around cryptos, Bitcoin holding its own, man. So the markets today, kind of a breather, kind of a wait and see kind of a vibe to the markets. Tomorrow's the big day, and as we know, tomorrow it's all about the Federal Reserve, man. Now the markets, in their genius, They say there's a 99 and change % chance that the Fed just holds rates steady tomorrow. The markets also see a 40% chance of higher rates by the end of the year. So they're predicting, I guess, that nothing's going to happen tomorrow, but maybe getting close to 50-50 chance of a rate increase in November by the end of the year. You guys have heard me say that there's only really two motivators in the world: fear and greed. Well, the greed's been the big motivator lately, but now it looks like some fear trickling into the market. The market was pretty much convinced that this inflation fight was winding down. Now, recent data, still a strong economy, still a strong jobs, inflation numbers going up, the data all working against the Fed. Now starting to see a little bit of fear, right, kicking in. And I'm telling you guys, I don't know how the Fed's going to do it, man. They have such a fine line to walk. I mean, I see like 0% chance of this soft landing that everybody keeps talking about. I don't know, man. I just don't see it. What do we have going on right now? Let's look at this stuff. I made some notes. So you got oil prices spiking, which is going to raise inflation numbers, putting more pressure on the Fed to raise rates. You got top line inflation still climbing from 3 to 3.2, now 3.7. Now we got oil spiking, so we can expect top line inflation to keep going up, right? You got government shutdown coming at the end of the month. So if the government shuts down, then what happens, right? So now the Fed, if the government shuts down and stays shut down for any real length of time, that means all the data that the Fed uses in their inflation fight and all their decision-making stuff, all that data stops getting produced because the government is shut down. So now you're going to see what the Fed will really be, like what was the phrase Powell used? Navigating by the stars under a cloudy sky. Well, now they're going to move from that to flying blind, because you're going to have no data coming in, no government reports, and the Fed having to figure it out without the benefit of those reports. I'm sure there's other stuff that they'll use, but most of the reports generated are generated by the government. You got higher rates coming for sure, guys. They're talking about this soft landing. They're talking about, I would not be surprised tomorrow to see the Fed hike rates a quarter point. I know I'm swimming against the tide here, but all I'm saying is negative data. I'm saying everything negative. Nothing really going the Fed's way in my estimation, right? You've heard me say that raising interest rates doesn't do anything to bring inflation down. Raising interest rates ultimately causes a recession. The lack of demand during the recession stops prices from going up, and in some cases brings prices down. So we're going to have this recession. Now, I'm not saying it's going to be anything like 2008 was, okay, where everything collapses and the whole world freezes up. It's not going to be like that. It's just going to be a crappy economy, everybody in a bad mood, rolling into an election year. It's just, it's all going to come together. And if anything goes wrong, any of these scenarios goes wrong, the Fed's going to be stuck with their Hobson's choice of either saving the economy by cutting rates or continuing to fight inflation by keeping rates higher or even perhaps raising rates again. Not going to be a pleasant day when they have to make that decision, right? Now, anything there's a whole bunch of scenarios that could upset this economy. But all kind of things are happening. Let's look at what's going on, right? So you got this gigantic auto strike now by the United Auto Workers, where they're striking on all three, the big three, all at once. Now, and they're asking for some pretty hefty demands. I laughed when said they were just trying to keep up with the rate of pay increase for the CEO and other executives at these companies. So this big strike, I mean, who knows how long this is going to last? And it's going to hurt the economy for sure, because now they're not even going to be making auto parts. So getting your car, not only getting cars made is going to be a pain, but getting parts is going to be a gigantic pain, right? You got the government shutdown coming at the end of the month. And who knows how long that lasts, right? You got any international event or international recession. If Eurozone goes into a deep recession, well, it's going to be tough for us to not get into one, right? You got, all kind of international possibilities with war raging and, China and Russia and their friends doing their thing, allied against us, right? And we know China's moving into a pretty serious recession right now. You got broke consumers running out of savings. The savings rate in the U.S., I just read today, the savings rate drops to 2%. 2%. From a pandemic high. During the pandemic, Americans were saving 34% of their money, man. Now, all the way down to 2%. I also saw today, the deficit numbers came out. National debt, yay government, hit 33 trillion with a T and lots of zeros. 33 trillion frickin' dollars. Okay? Broke consumers are running out of not only money, savings, but they're running out of credit because they've been tapping their credit cards to try to keep themselves going, right? You got greedy corporations raising prices until, the economy finally cracks. And these companies, I was reading today that there's a supermarket chain in Europe that is actually putting up postings on products in the supermarket about greedflation, showing this is what it used to be, 16 ounces for $3. Now it's 12 ounces for $4, and this company has had no real increase in the cost of its materials to make this product. So they're actually pointing out these profiteers, right? Which has got to be some kind of crazy. You got housing, really tough market right now, which is always a big leader in the entire economy. You got commercial real estate, which is about to collapse in a 2008 style collapse where it's just going to all come tumbling down. Kaboom, man. Billions and billions and billions of dollars about to be lost. You got, obviously these commercial bank troubles, these commercial real estate troubles are going to trickle down to the banks that lend them the money. So regional banks are going to be under massive pressure, already are. All of that could tip the country into recession. You got a crappy government in Washington, man, the worst government I've ever seen, and they don't do anything to help. All they do is either distract with a bunch of load of bullshit or make things worse, right? You got corporations turning now from price gouging to layoffs. And that's what's going to come. And when the layoffs roll, the Fed's going to get their wish, and they're going to get their recession. And maybe inflation rates start to come back down again, right? So all of this stuff, and then you add in election year, you add in all kind of other scenarios that make all of this so just fluid and crazy, where any day you wake up, everything's going to be different. That day could be tomorrow, because Powell will be giving his press conference. And if Powell adopts a really hawkish tone, which I fully expect him to do, I mean, if I'm Fed chair, I'm not going to bullshit the market into believing everything's rosy, man. Not when you see all of this. And I'm certainly no, Goldman Sachs analyst being paid for $60 Brazilian a year. Okay? So the world knows this. So is the Fed going to like continue to play us all for a bunch of idiots? Or are they going to come out and tell the truth? We'll know tomorrow. Anyway, guys, I've been rambling on. I appreciate your guys' support. I'll be back tomorrow to bring you all the news on this Federal Reserve stuff, plus any data that comes out tomorrow. As always, we appreciate your support. If you like what you're hearing, please hit the like button. It changes the algorithms. It gets our videos out in front of more people. As always, hit me up with your questions and your comments. We'll be back tomorrow to bring you the news you need. It should be an exciting show tomorrow, guys. Until tomorrow, then, take care. Thanks.